10-year yield has fallen to its lowest level in years. Investors are on the hunt for yield, and funds are taking advantage of that trend. The Bell Point Tactical Income ETF, here's a brand new one. The ticker is TBND as in dog. Launched last week. It's got a portfolio of global equities and bonds focused on income. But look at the mixture here. The real estate ETF, that's IYR. The TIPS bond ETF. The JP Morgan Emerging Markets Bond ETF, that's EMB, and the High Yield Corporate Bond ETF, HYG. Talk about a mishmash here, Andrew. What do you think they're trying to accomplish
really
there?
Mixing it up.
Is there something to be said for owning an ETF of ETFs?
I think that's again, there needs to be new innovation for growth. So someone puts a fund of funds. We've had mutual funds of funds out for decades, right? So this is an ETF fund of funds. Essentially, it's the same thing. But I do agree with you. The mishmash of products, putting the real estate in there, that's obviously going to generate yield, has some risk. Emerging market bonds, we trade a lot of just the EMB itself. That has a ton of volatility and ability to move around. But then you have TIPS, which is Treasury inflation protected. So, you know, the question of like, well, what do you do with rates? Well, that's why the TIPS is in there.
I guess, you know, Nick, my question is, why don't you just own one thing? If you want 4% yield, I mean, why don't you just own one or two things to get you there? I can understand, okay, I don't want to just own high yield. There's too much risk in high yield. If the economy turns down, that's going to go down. So I need to have some ballast by owning TIPS or something. Is that the theory here?
That is the theory. Diversification, sort of writ large in the fixed income world, is what this fund is trying to accomplish. This fund is for somebody that only wants to see one or two symbols on their brokerage statements. They want to see a bond, an income portion. They want to see an equity portion, and just leave it at that.
Yeah. I would agree with that, because there's a story for why each one could go up or down. So you are diversifying if you have them as a basket.
Yeah.
So you don't have any problem with the ETFs of ETFs, then? They're okay for you?
They're fund of funds.
Okay. I guess my question is, you know, sometimes it's easier to just, you could own 8 stock ETFs, and ultimately, if you just own Vanguard total stock, you get the same return as owning 8 stock ETFs, and then everybody looks at you as, why are you owning 8 ETFs when you can own one and get the same essential return?
Right.
Or am I crazy?
I mean, you can get alpha, but you're right. The downside of the fund of funds is you're paying a higher expense fee, right? You told me it was 60 bips, right, to own that, so.